The best performing recovery sectors since the March bottom, the S&P Tech Index up over 50%. But is it too late to ride this technology rally? Joining us now, we have one of the best technology experts in the business, John Ford. He's senior writer with Fortune. And we welcome in fresh market recruits, Bill Smead of Smead Capital Management, Dan Fitzpatrick of StockMarketMentor.com, Steve Grasso and Peter Schiff are still with us. Guys, good to see you. John Ford, let me start with you. Can technology continue this tremendous run?
Well, I think it's too late to look to the indexes right now. Like you said, they've been up in a lot of cases 50% since March. So I think you got to be really choosy right now. I like folks like Microsoft. Microsoft's got Windows 7 coming out later this year.
How's that going to do? Isn't that the most important thing that we face right now, is how Windows 7 is going to do?
I think that's the biggest issue right now for technology, because that drives PC sales, and PC sales, they cut through business, consumers, so many things, and drive purchases of printers, peripherals, all sorts of stuff.
Bill Smead, what do you think?
Well, we like Microsoft, although we're really impatient with the management of the business. It's almost like a Michael Eisner kind of a thing at this point.
Ooh, that's not good.
We like Accenture. And we also like eBay. We think that as the internet usage grows over the next 10 years, that being the toll bridge of the internet payment system is going to be just incredible.
Peter Schiff, you're so negative on so many things. You're negative on technology?
Well, look, you know, I own some tech stocks. I mean, my favorite tech stock that we were buying a lot of at the end of 2008 is up 500%.
Which one?
It's called Skyworth. It's in Hong Kong. And when we started, we were buying it at the end of 2008. It was trading at 1 to 2 times earnings. So now it's up to 10, 12 times earnings. But, you know, the tech stocks abroad, if you look at the stocks that trade on the Hang Seng, you get better valuations. You can buy them at lower PEs. You get good dividend yields. I mean, we were buying Skyworth. It had more than a 10% dividend yield when we first started buying it. I mean, that's not the case now. But, I mean, I think if you're going to buy stocks in the U.S., I mean, technology, if you can buy a company that has a lot of exports, I mean, it's better than sitting in cash, because inflation is going to kill you. It's better than being in U.S. government bonds. But still, given the fundamentals abroad, you're much better off looking for your stocks outside the United States, where there's better long-term economic fundamentals and better valuation.
What are you seeing in terms of technology? And again, it is way too broad. You've got to look at either chip equipment makers, right. PCs.
I think Jerry Boyer brought up a great point before. It's going to be a jobless recovery, so you want to be in the tech space. But for the retail investor, you have to realize that this is not going to be totally insulated from the market collapse.
Hey, one thing about jobs, that's really what drives this whole thing. I mean, I hear this jobless recovery, and that to me means a short recovery. At some point, companies are going to have to take earnings into the top line.
Can I disagree with these guys?
Feel free.
Can I disagree?
That's what I love about this country.
At the end of World War II, we had 100% of our GDP in United States government debt from fighting World War II. We spent the next 10 to 15 years paying it back, and had 3 recessions in the next 14 years, and one of the greatest bull markets of all time.
Peter,
maybe it's just me, but I think we've changed a lot since World War II.
Let me finish. At the bottom in 1982, we had 1/3 of the total debt we have right now at 3 times the interest rate. Talk to any business person that was in business in 1982. They'll tell you that they were having to borrow at 20% prime. It was eating up all their profits. Smokestack America was in a depression. The auto industry was in a depression. Smokestack America was in a depression.
Peter Schiff,
and we had the greatest bull market in history coming off that.
Look, first of all, we're going to have those high interest rates. And the problem is the national debt, which is about $13 trillion, is the biggest subprime mortgage of all. It's financed short term. Interest rates are going to go up because we only have low rates because the Chinese and the Japanese and the Saudis have been foolish enough to supply.
All right, I'm going to cut you guys off because we are off mission here. This was a technology segment. This was a tech segment. John Ford, what about Apple? We got a lot of retail viewers watching. They love Apple products. They love Apple stock lately. What do you think about it?
Well, you know, I'm going to get in trouble for not being bullish on Apple. But look, they've done really well thus far. The 3GS was a big hit. They could have a big holiday season. We got to see what they do with their iPod announcement that they always do in September. But I think they've gone up quite a bit, and they're starting to make some mistakes. I point this past week to them blocking a Google Voice app from their app store. And they did it because they wanted to maintain control over the iPhone's calling interface, I think. This is the same sort of thing MySpace did a couple years ago. There were folks that were, MySpace was the hottest social network out there. There were all sorts of developers trying to get onto MySpace and build their apps, and MySpace said, hey, wait a minute, don't do that. Facebook opened up and said, we're going to let people on there. They became the hottest thing. Google is sitting there with Android waiting to be that to Apple.
Back to tech. What do you think? What should people be doing with or without tech here?
I think you need to diversify in tech, which means buy the SMH. Buy semiconductors. They're the commodity of technology. I'm bullish on Apple as well. I'm long Apple. I think for the reasons that we just talked about. We've got the consumer coming in September. There's a lot of reason to be long tech. Long term,
you should be bullish on Apple.
You got to be careful about semiconductors.
My clients have been bullish on Apple, and the biggest concern with Apple was, can they encroach and steal some business from BlackBerry? I'm a BlackBerry user, and we saw through their earnings that they weren't able to get that corporate
I wouldn't want to buy the stocks, though, that are at
Schiff?
high multiples. I mean, if you're going to buy these tech stocks, you got to buy them cheap. I wouldn't want to buy stocks at 20, 30 times earnings. You got to make sure that you're not overpaying for them and try to get a dividend yield.
Well, the thing is, this market, traders have been overpaying for this stuff for the last umpteen %. That's the problem with these bull markets is they never let you in.
Or
you never get the
market,
pullback.
Look,
Yeah, whatever.
John Ford, you get the last. Who's
Bill Smead here.
Yeah, 10 seconds.
We own AT&T and Verizon.
Yep.
We would rather be owning the service, people sending us $100 checks every month.
Rather than the hardware.
Rather than the hardware.
Got
and
it.
get the dividend.
Thank you, guys. Thank you to you, John Ford.
Thanks.
Thank you.
Sorry about the diversion into all those other things. We got back to it, though. By the way, here.